Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf and Nam Phan of Pacific Private Money, California's fastest growing private lender. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. I'm sure there's still shelter in place, but once they come out, it'll be great to use those certificates, which are worth over $100. Today's trivia theme is general trivia. Now, we do have a special guest. We are welcoming back Michael Snurley to discuss a few things. One, how the coronavirus has led to an increase in cyber claims, workers' compensation, and business interruption insurance. Michael, welcome to The Best of Investing.
Thank you, Edward. Thanks for having me back.
You're very welcome. So let's start off with the coronavirus. Of course, it's been on everybody's lips for couple of months now. And you're saying that there has been an increase in the cyber claims. Why don't you go ahead and explain that to us?
Yeah, well, clearly a lot more people are working through the cloud and on their computers as opposed to being on site and maybe collaborating together in a conference room or, discussing things across cubicles. Everything's having to be done online and through the cloud. And consequently, it just provides a lot more opportunity for nefarious people to insert themselves into the equation. And so actually the main kind of cyber claim that has been on the uptick since the coronavirus started is what's called social engineering, where somebody is embedded in the system, somebody's embedded in the network, they're not making themselves known, they're noticing how people correspond with one another, and at some point, at an opportune time, they will send new bank information, they will make a request for money that seems very reasonable. And the reason those claims are on the uptick is maybe 3 months ago or 4 months ago, I could have stuck my head out of my office and asked my CFO, like, hey, did you just request, $500 of gift cards?
Yeah.
And they would have been like, no, I didn't send that. Whereas now it's like, it seems urgent. Maybe I respond, maybe I send an email, but don't get a response, but they keep saying it's urgent, it's urgent. So that's the main one. And so, I personally have seen more than a normal share of those kinds of claims. And of course, the industry is reporting that as well.
Yeah, and I know that from the wiring instructions, we went to a few seminars way before the coronavirus, and they were talking about a huge uptick in wire fraud.
Yes.
And so, the obvious things when, you get a request that's changing the instructions, rarely does a title company ask, rarely do they change the wire instructions.
Absolutely. And in fact, just last week, one of my clients, they received an invoice from one of their vendors. And immediately after the invoice came, another email came saying, and hey, by the way, we forgot to tell you, but we changed our wiring instructions. We changed our banking information. So when you pay this invoice, make sure you pay it to the right bank. So they paid the money. And a couple weeks later, the vendor reaches out and says, hey, you still owe the bill. And they said, well, we sent it to the bank that you had indicated because it came from either the exact same email address or a very similar email address. So close you wouldn't notice.
Yeah.
And so unfortunately, that's how it works.
Yeah. In fact, lately I've been getting like invoices on the heading, need your attention, that sort of thing. And it's for the radio show that has no invoices. So that one I'm pretty sure is spam.
Yeah.
So Mike, how do they insert themselves? Are they essentially have access to your email inbox? Is that how they're able to pick up on these communications?
Yeah, so they'll hack their way into your network. And so like back in the day when they would do it, it would be kind of like a smash and grab. They would hack their way in and they'd announce themselves and say, send us money or else. But now what they're doing, they've found it to be much more lucrative, is to just kind of lay low. So let me describe a scenario. This happened pre-coronavirus, but it was for our firm the most costly claim in this space, and it'll kind of show you how it worked. So somebody had hacked into a system of a small private business, but it was a very wealthy private business, and so there were wealthy individuals in the private business, and they were in there for actually 6 months, and They were just watching how people sent emails. They were watching how people corresponded. They were watching how emails went and who they went to get money. And so what ended up happening is the owner, they knew from all the correspondence, was remodeling his house. He was going to Asia to buy art for his remodeled house, specifically for his kitchen. And they knew he was leaving out of LAX at 10 a.m. So
wow.
At 10:05 a.m., presumably he's in the air. These hackers now seize the opportunity, send an email to the person who sends money and says, hey, my flight's, and they send it from as if it were the person. Hey, my flight's delayed 20 minutes. I'm online. I want to go ahead and get this piece because I don't know if it'll be there when I land. So I want to go ahead and buy it. It's $250,000 sent to this account. And, and it's for the kitchen. It's for that north wall in the kitchen. And everything sounds exactly right. And then they knew exactly how he would sign his name. If he would use only lowercase letters, maybe, instead of David, he would put lowercase d. And everything looked the same. So they sent the money. And then he said, hey, flight delayed another 10 minutes. I see this other piece, 125,000.
Oh, no.
And the only reason it ended up, they had sent 3 wires. And the only reason it stopped was because they said, well, we can't send anymore. The account's empty,
Oh, no.
And that's the only reason it stopped. Or they would have kept sending money, and it ended up being, north of $600,000.
Oh,
and he's on the plane, so they can't, they can't call him, they can't confirm, and they just kept sending money because it made perfect sense. Everything they asked.
And that's what the title company was saying too, is that they watch transactions and they just lay low until they seize the opportunity. Hey, the good stuff here. I mean, not good for the people losing the money, but it's interesting stuff here. Let's cut to our.
They got some money back. I will say that they got.
Oh, did they? Okay, good. Let's. You know what? That ought to be illegal. Okay, here's our first trivia question. What is the curved line between 2 points on a circle called? What do you call that? We're talking a little geometry here. And that's what one tree said to the other tree, geometry. First trivia question, what is the curved line between 2 points on a circle called? All right, stay with us. You are listening to The Best of Investing. Don't touch that dial. We are going to be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hanf and Nam Phan and our special guest, Michael Snurley. First trivia question was, what is the curved line between 2 points on a circle called?
Nam knows. Arc?
Arc. That is correct. It's
oh,
called
right.
Arc.
Sweet.
Yeah, very good.
What I win?
Yeah. What do you win?
It's the first one I've
You win
answered
nothing.
correctly.
You're one of the hosts. You win nothing and you'll like it. Okay, so I was going to say in the studio, but we're doing shelter in place. So on our Zoom call here, we have Michael Snurley, who's quite the expert in cyber security and workers' comp and all that kind of stuff. And Nam, you wanted to ask Michael a question about the cyber claims.
Yeah, so I mean, essentially, they are getting better and better, really sophisticated. So what are some safeguards or best practices to avoid getting, hoodwinked?
Yeah, great question. Of course, good network hygiene is important. And of course, if resources and funds are available, actually getting audited, getting your network audited, and seeing where the vulnerabilities are. And frankly, while they're auditing, they'll also say, hey, by the way, we noticed someone's in here. So that network hygiene, I think, is important. And then with respect to these social engineering fraud claims, I think the best practice is multiple points of verification, especially at certain limit levels that, say over $25,000, it has to be, you have to get sign off from 2 people to send that wire, or, maybe over 50,000, something like that, multiple points of verification. And then of course, if it's coming from someone internally, a request, that would be the second point of verification, just confirming. Because, the big one right now is the gift cards. And the reason that is such a big fraud is because it's low enough that it's not going to be prosecuted criminally. It's not high enough to reach a threshold, but yet it's still actual,
So Michael, when these bad guys go ahead and get you to wire money to some account, I'm going to guess that as soon as it gets wired in, it gets wired right back out, and there's no trail. Because otherwise, couldn't you follow the trail and get the money back?
Yeah. I haven't known anybody that's actually gotten the money back from the bad guys. So yeah, I think so. It probably gets wired right into the account and probably converted immediately to Bitcoin or some other non-traceable or kind of currency like that. So the only people who have gotten money back from these kinds of claims are from their insurance carrier.
Well, how much does something like that cost to get that kind of insurance?
Well, you can add it as sort of you can get a sub-limit on your cyber policy. So, I mean, I sold a cyber policy yesterday for $1,800 a year, and it had social engineering fraud on there for $250,000 sub-limit. So, it's pretty cheap. You can also get it on the crime. You can get a little bit more coverage on your crime policy, but again, you're looking at maybe $2,000 to $3,000 a year for most, average sized businesses, I would say.
Yeah, so we have that coverage at Pacific Private Money, and you made an interesting point about these emails that come in. The way they tend to give themselves away is a misspelling or something obvious. So, we had one come in where, in fact, Edward sent an email to someone who had just recently been hired in one of our accounting departments, asking that person to change Edward's wiring information, and the email was signed Ed. And so that's the only way we knew that it was. They weren't watching too closely, obviously.
Yeah,
exactly. So when they're impatient, they'll make those mistakes. But when they can just be patient and hunker down, and that's why the big scores for them are usually when they've been able to observe for months. Because they'll know exactly that Edward may not even put Ed or Edward. He might just put lowercase e, or he might put nothing. He might just send emails without any sort of name.
It's funny because I look at this, and these guys are pretty sharp. They're opportunistic, but they're cunning and sharp. And you wonder, why don't they just use it for good and do good, honest work? I mean, it's almost harder to be a bad guy if you have to watch a transaction for 6 months before making any money.
Edward, you're living in the fairyland.
I guess bad guys will always just be bad guys, right?
Yeah. So do they infiltrate like a network just primarily by email? Like they send an email with a link that you click on and it downloads some malware, or is it like, are there websites that people are going to that are fake websites? But how do they get into the network?
Yeah, probably. My guess, again, so that would be more a question for someone who handles these claims on a daily basis. I don't know how they necessarily get in for the most part. My assumption, yes, would be email or websites, something like that. But what else they do is, and they will create an email account that looks almost the exact same as, say, your CEO. So if I were the CEO of a company, it would be MICHAE lowercase I .Snurley at my tagline. So the only difference is that L would be a lowercase I, which looks a lot like an L, unless you're looking really close.
Yeah.
Or they would add an extra A, or maybe leave out the A. It's super close. So unless you're looking closely at it, you would miss it. So they just literally will create that and then can send it. So that's also another way that they make those requests.
Wow. I'll tell you what, let's
be on the lookout.
What's that?
Always be on the lookout.
Yeah.
Trust but verify. Trust but verify.
That's it.
The biggest shame of it is that when you're a company that they've with online banking, it's become so much easier to transfer funds or wire funds or ACH, and as a result of all of this now, the verification that's required, authentication, two-factor, it actually has taken a little bit of the efficiency out of it, but it's certainly well worth it for safety purposes to have continuing confirmation on where you're sending your money to.
Absolutely.
Yeah. I like that. Let's see. When we come back from the break, I do want to get into workers' compensation, because that's kind of a hot topic, as well as business interruption insurance, which during this coronavirus, force majeure is a famous phrase.
Yeah.
We've all learned what that means.
Dreaded phrase.
That's right. I didn't take French, but I think is it Latin? Force majeure.
French.
Sounds French to
French.
me.
It sounds French. Okay, here's our second trivia question. All right, Nom, your one
trivia question.
What's that?
That wasn't the trivia question.
No, that wasn't the trivia question. Here it comes. What U.S. city is home to the Gateway Arch? And it's not McDonald's, all right? Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. What U.S. city is home to the Gateway Arch? So after we come back from break, we answer the trivia question. We'll ask Michael about workers' compensation and business interruption insurance. And then both Nom and I have a deal of the week that is really interesting. This one is a little different. Each story is always a little bit different, as to why someone comes to Pacific Private Money for a loan. This is a new phrase that I had not heard before. So we will come back from our break, answer the trivia question, and then move on. So stay with us. You are listening to The Best of Investing. Do not touch that dial. Welcome back to The Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Hanf and Nom Phan of Pacific Private Money, and Michael Snurley, our special guest. Second trivia question, what U.S. city is home to the Gateway Arch?
St. Louis.
St. Louis. Very good.
That's Gateway Arch or Gateway Arc?
Yeah, no, Arc was in the first one. Arch is in the second. You guys are so funny. Okay, well, the next question's a little bit harder. Those two were a little too softball type. All right, so our special guest is Michael Snurley. We've already talked about how the coronavirus has led to an increase in cyber claims. Let's move on to workers' compensation.
Yeah, well, workers' compensation covers bodily injury to employees. It's a first-party coverage for an employer. And historically and typically, illness and diseases are excluded. So like if you catch a cold and you're a worker, it's not going to be picked up on workers' compensation. Even if you could prove beyond a shadow of a doubt your coworker gave it to you, it's just really hard to figure out how those, where you got sick. And then of course they don't want to pay disability. You missed a week of work because you had the flu, and
it's for accidents.
It's for accidents.
Okay.
But coronavirus is different, and it's a fluid situation, and so everything I tell you could be totally different once the show airs. Once the show's over.
Mm-hmm.
But basically, right now, the way it works is coronavirus will be covered by workers' compensation per state law, per state statute for essential workers. So if an essential worker works at a grocery store, if an essential worker works at a hospital or something like that, and they contract coronavirus in the course of their work, then they are going to receive.
Okay, so I got a couple of questions. One, how do you prove that they got it from work? And then two, how does that affect the workers' compensation claim or compensation insurance premiums?
Well, to answer your first question, it is again very hard. And I actually read the guidance from OSHA yesterday, and they said you just have to give a reasonable effort. That's literally what it says: a reasonable effort to do an investigation. But basically, the burden of proof is going to be on the employer to prove that it didn't happen at work. So if you are a grocery store and somebody gets coronavirus and works, as a checker or bagger, it's going to be the burden of proof on you to prove they did not. So I think basically it's going to kind of work.
It's going to be covered. Okay.
Yeah, and then second, with premium, it's going to count as a claim. And just like somebody might hit their hand with a hammer or something, and they go to the doctor and they miss a couple weeks of work because of it. It's going to be counted as a claim, which would then affect the premium. So.
Oh, that's a killer, because there's really not much you can do except for tell your employees stay at home, even if you're an essential worker.
Well, and see, this is where, and the reason I was actually reading the OSHA guidance yesterday is because people are going to start going back to offices. And so, the question there is like, hey, we're not essential workers, but we are around our coworkers.
Yeah.
What if we get coronavirus at work because we had a conference, we had a meeting in our conference room, and the person who sat next to me got it, now I have it. So again, very fluid. It's all sort of emerging right now, but as it stands, it would, the guidance would seem to indicate that employers will be on the hook.
That's really kind of tough, specifically because, like you said, if you get a cold and you got it from your coworker, but that doesn't matter. A regular cold doesn't count.
Yeah.
or the regular flu doesn't count. Yeah,
Right.
That's a tough one. And then the last one here is business interruption insurance. Explain a little bit about that, if you would.
Yeah, so business interruption is a coverage on the property form of an insurance policy. And what it seeks to do is it seeks to cover the business income that would be lost because of a covered loss. So say a fire burns down a grocery store. Well, clearly they can't produce revenue. They can't, pay employees. They're going to lose income and revenue because of that. The business interruption would respond. I don't know of anybody who hasn't experienced some interruption because of coronavirus, who hasn't seen some dip in revenue because of everybody, and some significantly, right? Like certain dine-in restaurants where they don't have a takeout option. I mean, zero. Arts, museums, theaters, places like that, zero. But I mean, even businesses that can still operate remotely and through the cloud have seen a decrease. So of course, the big question is, my business has been interrupted. Do I have coverage? And I have answered this question for almost literally every single one of my clients because everybody is asked. And unfortunately, the answer is no, because for the business interruption coverage to respond, there has to be a covered loss, which is related to property damage. And the carriers are coming down in the place and just saying a virus doesn't produce property damage, therefore the coverage doesn't respond. They're also saying a virus is a stated exclusion in the policy, which for almost every single policy is true.
Wow.
Wow.
No
well,
kidding.
you're for good news today, aren't you?
So this is why, of course, everybody in the insurance industry has such a great reputation and everybody loves us so much. But yeah, it's been a very hard conversation. Now, I must say that if someone wants to submit a claim for a coronavirus interruption, we submit it. We don't ask questions. We don't counsel against it. I'm just sharing with you where the carriers have stood. There's already been multiple lawsuits. This will get played out in court. And so it is also a fluid situation. So we'll see where it ultimately lands. But as of right now, that is the carrier stance.
Well, the laws are such that the people that can pass laws are politicians. They're going, especially here in California, they're going to look for every deep pocket possible and try to pass laws in favor of their constituents. So there's going to be actions to try to force insurance companies to cover virus-related losses, just like there's legislation to make it illegal to evict your non-paying tenant and to be able to forgive, not only just defer for as long as a year, but even forgive rent payments. I mean, where does it end? Who's the one that ends up, picking up the tab at the end of the day? And is it the U.S. taxpayer in the form of, increased national debt? I mean,
Listen, as soon as they allow that for the IRS, I'm on board. But forgiveness is like, no, don't worry, you don't have to pay your taxes this year.
Yeah, exactly. I know. I love how the governors and everybody are like, hey, you don't have to pay rent, and it's like, well, do I still have to pay property taxes? Like, I mean, like while we're in.
And do we have to still pay? Yeah, but do we still pay your salaries?
Yeah, so we're not paying sales tax this year too, so that's cool.
All right, let's get to our last commercial break, and again, when we come back, we're going to share some deals of the week and get an update from Mark about Pacific Private Money, because I think there's some very good stuff going on there. All right, here's our third trivia question. Who did Eisenhower defeat twice in presidential elections during the 1950s? Mark, you were born in the 1950s. You should know this.
Very, very late 1950s. There's about 5 minutes left.
Yeah, that's right. All right. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. Who did Eisenhower defeat twice in presidential elections during the 1950s? All right, stay with us. The Best of Investing will be right back. Well, welcome back to the Best of Investing. Last time, actually, not last time. Next time will be the last time. One more time. I'm Edward Brown, your host, along with Mark Hanf, Nam Phan, and our special guest, Michael Sterling. Third trivia question. Who did Eisenhower defeat twice in presidential elections during the 1950s? Anybody?
Oh, Dewey?
Yeah, close. No, Adlai Stevenson, who apparently was a very brilliant man, but apparently he was like one of those guys who was a little too far ahead. time, and so people could relate more to Eisenhower. Okay, let's see. So I'm going to share first my deal of the week, all right? Here we go. So these borrowers have FICO scores in the high 700s. The bank had already approved them, but then the underwriter backpedaled under what was a term that used to be used, and it seems to be coming back, called payment shock, which basically is that the new house payment was going to be much larger than the current one that they have. So it's a big payment shock. I mean, the borrowers know they have it, but the bank said, "Whoa, wait a minute! You know, your mortgage payment's going to double, right?" So the bank said, "Listen, as soon as you've got about 6 months worth of seasoning, then we can go ahead and refinance you out. But we're not going to help you buy the house for now." The company that they own grosses over $1 million in business. It's a 70% loan to value. They have hundreds of thousands of dollars in the bank. And they've received, and there were multiple offers on this property, and it's in a very good neighborhood. So this is one of those deals where we're going to provide them an 11-month bridge loan, so that in 6 months, when the bank goes ahead and says, "Okay, now you've proven you can make your mortgage payment, we'll go ahead and refinance you out." So it's one of those kind of slam dunk, well, it's somewhat of a slam dunk type of deal that is provided by Pacific Private Money. And Nam, I'm going to let you get into a little bit more what PPM does and your deal of the week.
Yeah, before I do though, so quick question on the last one, payment shock. Who was shocked? Was it the bank?
The bank. Yeah.
Like,
because the borrowers already knew.
We doubt that you can make this payment, basically, because it's doubled.
Yeah.
So even though you're approved and even though you're okay with it, but we're going to hang back until you've proven that you can, until you have enough reserves.
Well, not reserves, but until you can prove that you are making the payment for 6 months, and then we won't be shocked anymore.
Wow, that's crazy.
It is.
So this deal of the week is, well, okay, so what does Pacific Private Money do? Pacific Private Money, we're alternative lenders. We lend on residential real estate. We're plan B, essentially, when somebody can't get bank financing, so can't get plan A financing, which they should always approach bank first, because the rates are, you know, obviously, especially these days, very, very low. But there's a lot of reasons why people can't get bank financing, especially right now, and Pacific Private Money is here to fill that gap with financing options. Oftentimes they're really short term. People come to us typically because they're in, you know, sort of transactional distress, as we call it, versus somebody who really isn't a qualified, you know, borrower, delinquent credit. And in your case, this my deal of the week is one where, again, very qualified borrower, high credit scores. This person had an employment gap, so they were in between jobs. And at this person's level, he was going to start a job as president of a small company. Okay. So it's not like this person was, you know, a new employee who was trying to get a loan. This person had a track record, 20-year track record of successful leadership, running companies. But you know, at that level, sometimes you don't get a job the week after you leave your prior job. So this was a 6-month gap. And the bank said, well, you know what? You have this employment gap. We want to see employment seasoning.
So that's called employment shock, right?
Employment shock, yeah. We can't believe you're going to be able to get another job, even though you've been president for 20 years somewhere else. So he came to us. And so not only, you know, would we look at their employment history as sort of a metric for determining whether or not they can get another job, but this was also a short-term need where they were using collateral that they own in other properties for the purchase of a property in Carmel. So we cross-collateralized other property. Again, this person was very successful, so he owned owned investment properties in this case, and we made a loan for $1.4 million. There was a pending offer on the table. We closed the loan a week after they started this person started his new job. So we love stories like this, just because there's so many people, like Mark says in other shows, you know, the Bay Area has a lot of transitory employees, even at the C level, at the executive level, people jump. And we look at their track record, and we know that, you know, oftentimes we feel comfortable that they're going to land on their feet very quickly in a new position. And
yeah, conventional financing today, you know, what they call conforming loans, you know, it's really a narrow window, and it's not built for people who move around. It's really not built for a typical Bay Area client. So you're in Northern California, you're at the hub of technology, people are moving around, you know, notwithstanding what's happening right now where you got a lot of people who are either furloughed or working from home, but you know, you have self-employed and you have transitory issues, and then you've got payments oftentimes that are deferred because you've got stock options, so you got other types of things going on, and bank financing is just not built to accommodate that now, at least not in a hurry. And so when you're buying real estate and you need to close in 21 to 30 days because you have to be able to compete and provide a compelling offer to a seller of a home, oftentimes borrowers will take advantage of one of our bridge loan products. Yes, it's the interest rate's higher, but you're only paying interest. You're not paying principal. So those, you know, someone who borrows $1 million from us, the payment's actually roughly about the same. It's a little bit higher than they're going to pay the bank, but our payment, it's just interest only. So when you talk about payment shock, it's really, they're not, first of all, they're not going to keep the loan for a year, generally speaking, so they're not going to pay 10% for the money. The payment is based on an annualized rate of 10%. But again, you're just paying interest on the money, and then when you sell your current home, you could pay us off. So it's really a great tool. It gives people the time they need to, we help them, it's a tool to capture the property, gives them the time they need then now to go and get a refinance loan, which again, refinances right now in the COVID period take longer, and a lot of banks are not even taking applications right now. But as in the ensuing months, when things get back to normal again, you know, banks will again be looking for, you know, a vibrant refinance market. And again, we just provide people the opportunity and the tools to help capture the real estate. Then they have all the time they need, if they need 90 to 120 days, to get optimal bank financing based on their abilities.
Okay, why don't you give out your information, and then before we get to break, we want to give out Michael's information also. Go ahead, Mark.
So go to pacificprivatemoney.com. That's the best way. We're always updating that website. We just added some new products to our investor page. Definitely worth checking out, pacificprivatemoney.com. Or if you'd like to pick up the phone and talk to people live, we're at 415-883-2150, 415-883-2150.
And Michael, how do people get a hold of you if they have questions about insurance, workers' comp, cyber claims, all that sort of thing?
Yeah, no, the best way is via email. It's my name, michael.snurley@proco.global, or via phone, 415-223-5580, and that will connect you to my office.
Very good. All right, guys, we're coming back with some closing comments. Don't touch that dial. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf and Nam Phan of Pacific Private Money, and Michael Snurley, our special guest. No trivia question, but Nam, we have a fund event coming up soon.
Yeah, June is just around the corner, and so it's time for our next fund Zoom meeting, and that will be Thursday, June 25th. It will be in the afternoon, probably 5 o'clock, maybe 6 o'clock, but we'll let people know on the next show and on our website too, under our events section. So the last one we had was on April 16th. And it was really well attended. So many people wanted to know, hey, what's going on with lending with, you know, COVID-19 happening. I think this one it'll be really interesting to see, you know, by the 25th, it will have been 2 months since the last event, and you know, every week is like a lifetime right now of change. So in about a month's time, it'll be, you know, a lot will have changed.
And things are actually going better for you because banks are pulling back, so you're getting more loan applications, aren't you?
Yeah, and you know what? I'll tell you a quick story. We had an investor reach out who said, hey, Nam, you know, I was just at the bank. I have a CD that's maturing next week. And the bank rep came up to me and said, hey, I've got a really great, because you're a premium client, I've got a great savings program for you where you can earn 0.004% of your money. And he said, wait,
that's incredible.
He said, 0.04? He's like, no, 0.004. And he said the way he said it was so like optimistic and upbeat. But he said, no, I'm going to go invest it in Pacific Private Money.
Yeah, there you go. Hey,
so we'll see him next week.
We forgot to ask you the email question that came in. We have time for this one. Can you please explain how buyers are using your company to present, quote, all cash offers?
I'll do that quickly. So we don't suggest that a seller or a buyer rather instruct their agent to make all cash offers if they intend to use a loan. However, in practice, what we find is that your buyer's agent may very well, in an effort to get the contract on
compete with other offers.
Competing with other offers, may decide, they'll, at the very least, they'll do a non-financing contingent offer. They may still say there's financing, but there's no financing contingency. But if they really, really want to make it look strong, we've seen offers, purchase contracts come back to us from our borrower clients that say all cash. And then they basically alert the escrow officer that, oh, by the way, we're going to use a hard money loan to close. And that, that oftentimes will, sometimes there'll be a little bit of blowback from the seller's agent, the listing agent, that is. But again, it's just, in a marketplace where it's tight inventory, I mean, people do what they need to do to obtain, and we don't tell people to do it or not to do it, other than the fact that using us for financing on the purchase side allows your agent to mimic an all-cash offer in some form or fashion.
Gotcha. Yeah, like sometimes the selling agent will call to make sure, is this really, like, are you guys really, really, really going to lend the money in 14 days or 10 days or whatever it is? Give out your information one more time, if you would.
Sure. PacificPrivateMoney.com, 415-883-2150.
All right, Michael, give out your information one more time, too.
Yeah, Michael.Snerly at proco.global, 415-223-5580.
All right, guys, here's our thoughts for the day. You are the only one who can limit your greatness, and the difference between interest and commitment. When you're interested in doing something, you do only what is convenient. When you're committed to something, you accept no excuses, only results. And I got a quote here from Ronald Reagan. It says, it's true, hard work never killed anybody, but I figured, why take the chance? I like that. That came from El Presidente, right?
That's right.
Well, guys, another good show. Nam, one more time about registering for the upcoming webinar.
Yeah. You can go to www.pacificprivatemoney.com and go to our events section, and we'll have the event up shortly, June 25th. It'll be a fund information session, and we'll talk about all the different ways that you can invest with Pacific Private Money, because there are more ways today than there have ever been.
All right.
And it'll be at 5 o'clock.
Very good.
So
okay.
Looking forward to having everyone.
All right, guys, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.